Hello, everyone. Welcome to Face and Follow Through Tuesday, since it was Turnaround Monday instead of Turnaround Tuesday. Hello, Sean, Brock, Glenn, all you warriors, how you doing today? Okay, so yesterday I had a feeling that Turnaround Tuesday was going to happen yesterday, and it did. So dollar peaked. Really not much of a pullback yet. It could still see 100. And if that happens, you have some confluence in euro up around 110. That's where it really accelerated to the downside. So if you're a dollar bull, this is going to present a buying opportunity in the dollar, a selling opportunity in euro, etc. If you think this is the beginning of something different and this is a major euro bottom, dollar top, then it's just beginning. But right now, take things a day at a time. Do the right thing today, and tomorrow will take care of itself. Same situation in S&Ps, and there were a couple of different opportunities after this explosive candle on the Fed announcement. Pulled back and could not make new lows. Could it still make a new low? Didn't quite get down to this line one more time. I guess you could call this 1, 2, 3. I will say this: we start closing back over yesterday's highs. 2400 is where the wedge line comes in. A little bit above it is a 50-day. So above 2400, yeah, I don't think you could be short. So, you know, no bear market, and this has been a hell of a bear move, right? Happens without some vicious bear market rallies in your face, and the S&Ps are set up for it. So just looking at some fibs, let me adjust it to yesterday's low. Close enough for government work there. Okay, so 23% is going to be here. Why not halfway back? And that's something that Blake talked about, that maybe we could, if we start cracking some of these resistance levels, get halfway back. Why not 61.8 back? And in fact, if you believe in, and this is something I was talking about last week, and it's still pretty unbelievable, but if you just cover up the title and you don't know what market this is, right? What's the rule on wedges? How much can they retrace? Come on, we have a very educated crowd here in Face. 50%, 100% Gavin. So if you believe in the theory, I guess I could have anchored it anywhere, but I anchored it from up here. So if you believe this is a falling wedge, looks like we could see, over 3,000, right?
Sold to the gentleman for 100%.
Oh God, I was going to give it to you at 61.8. You missed a discount. You're going to be thrown out of Greece, even though you're all locked down. They,
At least I didn't miss the ForexAnalytix discount.
Okay, don't miss that. What a great segue, Steve. You guys know that we still have this going on, right?
Last week.
Wow. Yeah, last week. Oh, Gregorius sees 2020 highs in the next 6 months, new highs. Wow. Okay. So this is an important low for you, Greg. All right. So anyway, sounds like you don't even need us if you know what's going to happen, right? But just in case there are other instruments that maybe you have a couple of questions about.
Just for context, new highs means 57% higher from yesterday's lows.
Okay. In 6 months.
Yes.
Okay.
Let's hope that's not the case, because the only way I can think of that happening is not in a good way.
You mean just dollar debasement?
Complete dollar debasement, distraction, yeah. The only thing I can only way I can think of for a 57% rally from yesterday's lows.
Yeah. And, you know, something else, thank you, Steve, something else I've been talking about for a while, that I was looking for a shorting opportunity. Who remembers what levels I've been talking about? Could it be 1600 to 1620? Well, wow. You know, we got there yesterday. All right, so the day's not over, and that's just a 4-hour candle. And the daily hasn't done anything wrong yet. But if you're a bear and you go, God, I'm sorry I missed this $250 decline, this could be a failing rally. You know, I wouldn't want to take it home much above today's highs. I think we're a little above 61.8 on this. Maybe we're going to approach 78.6. But if you are a precious metal bear, this would be a shorting opportunity. And if we had equality from here, it, you know, target I've also kind of had in the back of my mind, it would take it down to, you know, under the 1400 handle and trade down around here. But, you know, this is, I'm sure a lot of people thinking gold soon 1700. Okay. Okay, so that's, you're just looking for a rally back to the highs, 1700 plus. Okay, well, we'll see. You know, it's possible. And, you know, up here, no one really thought this was possible either. But you know what? You could be right. Everything went up together, everything went down together. If you think that the deflationary part of this move is over and it's all dollar debasement, S&P's going to new highs, you're right. Gold should go to 1800, 1900, should go to 2000 and take out the 2011 high. But, you know, I kind of do things a day at a time. And I know this was an area I was looking for. I tell you what, even if it's not a short, if you were getting long down here, it's not a profit till you take it. I'd be booking half. If I was fortunate enough to have decided, well, I think it's going to 1620, I should be long. Okay, so this is where I'd be taking profit. Silver's outperforming, not by a lot, but it is outperforming, and the exit gold silver ratio is showing signs of topping. But you know, tops are a process, and this was such an extreme high. And what's this RSI reading on the gold silver ratio? Only 90, above 90. So what does this RSI imply? New high confirmed by the RSI. What's the implication? Anyone know? Okay. For $999,000. No. James Huffman has it. Yeah. Normally you don't get a high on confirmed high. Higher. Oh, look, Joe Perry knows new higher high. All right. So Joe Perry, because you came up with the right answer, I am going to offer you, let's see, let's go to home. Okay, Joe, I'm going to offer you a membership here. And so you could go into the chat room. You're always there anyway. And really, guys, take advantage of this. And also, I don't know, with the kind of volatility, how many people are unsatisfied with the way their brokers have been filling them during this volatility, or stops being picked off, or you're just not that happy with the service you got with your broker over the last 3 weeks? Because, you know, this is where the rubber meets the road, is getting execution in, you know, kind of difficult, highly volatile market situations. So, you know, you don't know if you have a good racehorse until you run it against another one. There's no law that you can't have more than one FX account. unless you're in the US. And I think your choice is you can't have more than 3 because there are only 3 that'll take us. But otherwise, you should talk to the guys at Forest Park FX and talk about rebates and tell them what kind of experience you've had trading the markets over the last 3 weeks, because this is unprecedented, but I don't think it's going away either, this type of market action. So call the guys at Forest Park FX and they'll get you set up with cash back or to pay for your subscription and to find a broker that's going to work a little better for you. Blake, how you doing this morning? What's new, brother?
Hey, good morning.
Good morning. So it was turnaround Monday.
I guess it was.
Yeah.
Yeah, excuse me, my stomach's like growling.
Everyone feel okay at the house?
Yeah, I mean,
All right, good.
We're making do. First and foremost, I guess we should probably look at gold. Gold has exploded. You talked about it, and here we are at just continuing to press higher. Matter of fact, let me see this. I mean, we're past like the 618 retracement here.
Okay.
And gold looks like it's had. I exited my gold a little too early last night at the 50% retracement because I was like, oh, it's gonna pull back a little bit, and I was gonna reload this morning, but it just kept going. And Joe pointed out, matter of fact, Joe, who you were just talking about, Joe Perry, who's listening in, he had pointed out this morning that that there's like lack of liquidity right now in gold, and a lot of different providers can't even
I was going to ask that because I have a tail that got up to 1620, and you show it not even getting there yet on your platform.
That's because a lot of these ETNs can't even they can't even fulfill prices right now, and it's kind of crazy where we're at with
not
gold.
Good.
Yeah. There's a lot of demand out there. Let's just put it that way. And then you got silver that is I mean, silver is actually higher than where it is. Well, no, I guess it's trading right around here, but silver's had a nice recovery too. And if you guys are watching the week ahead video, this is the last thing I talked about. I said, if there's anything that you want to own, and we were down here at 1490.
Yeah.
I'm like, you want to own gold in this environment, and as we get this, package of funding, just imagine how many dollars are out there. I know I talked about this yesterday too. It's just the gold's going to be in demand, and so you gotta look to buy dips. I think that's going to be important. Finding levels where you can own gold. Like I'd like to own gold again around the 1580, 1560 level, if I can get it. If we can get a move down there, that's what I'm looking for. A couple other things I want to point out this morning. The euro dollar is having a great recovery. I'm looking at a move back up to 109.50 if we can get it. That'll be the 38% retracement. I don't know if we're going to be able to get it because it's already showing failure here. The dollar's starting to rip. You can see the Aussies rolling over. It's going to be really. I think it's going to be very difficult for the dollar to sell off too much in this environment. You can see stocks are already starting to come off their best levels when being limit up. I'm really hoping that when this package gets announced that we can spike up towards 2400 and I can be a seller of the S&P up there. I'm looking at this channel and just trying to trade inside of this channel, but you got to wait for this package to be passed. And once the package is passed, everybody goes, woo, got to buy stocks. And then the stock market rallies to 2400. I'm assuming at that point in time, you're seeing a little dollar weakness. So you're going to see like the Aussie price spike up towards 60 cents. You're probably going to see the euro, maybe spike up towards 109, 109.50. And then you got to use those levels as opportunities to be a seller. Does that make sense to you guys? I hope it does. I'm just thinking out loud here that's the way you're going to have to be playing this is, just looking for these pullbacks to get into, and I sit here and I look at the US dollar Canadian, for example, this is one of those like leading type of indicator currencies that you see and you're like, okay, you know, with the dollar Canadian bid, there really isn't much reason for you know, the dollar to move lower in this environment. When you got the dollar Canadian moving up, you got the US dollar Mexican peso that's actually still really well bid too. You know, how are we going to get any type of meaningful sell off in the dollar when we have, you know, currencies like the Canadian, currencies like the Mexican peso still moving up? All right. So, you know, I look at the Aussie dollar, and the Aussie dollars, you know, I shorted a little bit earlier, just, you know, when we were trading above 59, like 12 or something. And I was like, yeah, you know, and I just made a few pips, kind of, you know, scalping in and out type of thing. I wasn't even telling anybody. It's one of those, you know, I'll just, you know, try to take a few pips here and there. But I was thinking, okay, we're heading lower. I just didn't think we were going to just drop as aggressively as we've dropped just over the last, 15, 20 minutes or, 30 minutes or whatever. So, you know, I think you gotta watch the Aussie here. It might, you might catch a bid down here at the 58.50, maybe, you know, if we can get down there. But I think you got to play inside of this wedge and just understand we are in a wedge. So just, you know, be respectful of it and, you know, try not to get too, I think you got to play the dollar on the long side on dips. So you got to wait for the dollar index to dip and then, you know, try to get long versus trying to short the dollar. I think shorting the dollar is pretty dangerous in this environment still. So, so those are just some things that I'm
Speaking of wedges, Blake, how's your approach shots?
What's that?
Speaking of wedges, I was wondering how your approach shots are.
Yeah, my approach shot is not so good.
I bet you hit a wedge from about 150.
No, I actually use my wedge. My wedge is my 140 iron.
Yeah, all right. See,
yeah.
You're a big.
My 150 iron is my 9. So.
Yeah.
So anyway, yeah. So that's kind of what I'm thinking here. I'm really. I've, you know, had a decent few days. Last week was a little rough. And then, you know, Sunday, Monday was good. So, you know, I think I made some money on Friday. Just kind of chopping around a little bit. So, you know, it's like when I make a little bit of money, I step back and I'm not getting very aggressive. I'm still really much sidelined. Gold treated me really good the last couple of days. So I have to, you know, take a step back and go, okay, I've done really well in like the gold market. So it's important for me to, when I do well, to step back and, you know, not get too, you know, too aggressive and give back a lot of these profits, if you will, you know what I'm saying? So
aren't some of your best ideas when you're doing the week ahead video,
I'm sorry?
Aren't some of your best trades and ideas, Blake, happen when you're putting together your week ahead video because you're planning what the week and your best and highest probability trade setups are going into the week?
Yeah, it really is. My week ahead video allows me time to get clarity
because you're not in the heat of battle.
I'm not. I can sit there and go, okay, where are we? What's logical? You know, what's, you know, what's the macro environment? And so, yeah, some of the best ideas for me come from the week ahead video because I can really plan out my next, like usually Monday, Tuesday out pretty decisively. And I know a lot of you guys watch the week ahead video and I'm thankful of that. And hopefully you get something out of it too. So,
that was a great call.
Thank you. So, now that I'm sitting here and I'm just kind of looking around and not really doing a whole lot at this moment, I keep thinking, okay, well, where's the best setup right now? And for me, you know, it's just, okay, if I think we're going to spike up to, you know, 2,400 in the S&P, then, and even if you don't trade the S&P and you're like, well, I don't even trade the S&P, I just trade currencies, you know, where am I gonna, what am I going to target on a move higher in the S&P? And, you know, that really points me in the direction of like this euro. Like the euro, I know it's come off right now, but I still think that the euro has the ability to reach up here, you know, above 109, and that's where I'm ultimately going to be a seller. You know, and you know, same with the Aussie. It's like I ultimately want to be a seller up here at 60 cents, roughly 60 cents. You know, maybe this 59.70 or whatever. But those are the prices I am really looking for, and I'm going to try to wait for. You know what I mean? Versus sit here and get chopped around while the market is just trying to find its footing, because I believe that's where we're at. You know, the market's really trying to find its footing. You know, one other currency I was looking at, and the spreads are really wide sometimes in this US dollar Norwegian krona. The US dollar NOK, this currency has come off, and you know, I do believe it's, let me remove that really quick. I do believe it's overbought, and it will eventually come down. But what I'm thinking here with the US dollar Norwegian krona is something like this. And I'm just roughly doing this, right? This is going to be a really good, I think, in my opinion, a good indicator of how to trade the dollar. And I think it's going to be something like this. If I had to guess, if I had to guess what the US Norwegian krona is going to do, it's going to be something like this. You know, we're going to get a consolidation. We're going to see some risk off. The US dollar Norwegian krona is going to push higher again, and then give us a lower high. And that's going to, this is exactly right for me. This is exactly where I want to be a seller. And that I'm thinking days ahead, you know, like maybe even a week ahead. You know, this market, in my opinion, the stock market is still in, you know, sell rallies mode. I still believe that when the stock market hits a, you know, we get this, you know, announcement, and we get some sort of, you know, liquidity, you know, injected into the market through, you know, fiscal policies, it's going to allow the market to pop a little bit, then we're going to sell off. You know, I think nothing's really able to stick in this market. So, but what will happen is when the market pops, you know, you're going to see, you're going to see, you know, this happening in the US dollar Norwegian krona back and forth. The market's going to sell off again. That's going to allow for a pop in the US dollar Norwegian krona, but the market will stabilize. I think like the S&P is probably going to stabilize closer to, you know, 2000. And when it does, that's going to give us the opportunity to short the US dollar Norwegian krona. That's kind of what I'm planning with the US dollar Norwegian krona right now. I'm not in it. You might be asking, well, Blake, why don't you get long down here? I'm not confident enough to. I want it to show me what it's doing versus me make assumptions on what I think it's going to do, and then just trade it accordingly, if that made sense. So anyway, yeah, so you know, today's, I think, going to be a little trickier market. You got to be careful. One of the other things I wanted to say is I'm a little worried. I watched, you know, Donald Trump's press conference, and he really wants to get America working again, which makes sense from an economic standpoint. I believe that a second round effect of infections is going to hamper the country longer term from a health perspective if he decides to allow, you know, certain states to go back to work early, you know, and I understand that there's hot spots in the market, or hot spots in, you know, because of the COVID-19, whether you're talking about California or New York or, you know, Washington State. But if you really allow people to work in certain spots, then, you know, then what's going to happen is you're probably going to see those certain spots, whether it's like where I live in Arizona, or, you know, in certain parts of the United States, that really aren't as affected are going to get infected. And then the problem is, I think it becomes a bigger health issue, which is, in turn is going to be a longer economic drag for us as a country. So I'm a little concerned about that as a whole, but that's to be seen. It's going to be really interesting to see how the market responds. I do believe that if we come out of a lockdown state, the stock market will continue to be under pressure. I think the market is a very rational way to analyze the way that the U.S. economy is going to operate moving forward. So if you see stocks really come under pressure, that's probably out of an overall arching feeling from the market that we are going to continue to see the death toll rise here in the United States. And I think that's when I look at like the equity markets, technically while we're below 2,500, and I know I tweeted about it, but that's really the big kahuna right here is the 2,500 level. As long as we stay below that, I don't see any reason to be on the long side. The thing that's going to break us above 2,500, in my opinion, is some sort of medical breakthrough, where we see, a virus response, whether it comes in terms of, a vaccine or some sort of, prevention. Not prevention, more of something to tackle, current cases. I think that, any move up to 2,500 has to be sold in stocks. All right. And the rate that we drop in equities from here probably has more to do with the response from not only the US government, but from world organizations as well. So anyway, that's all I really have to say. Steve, Stelios, how you guys doing this morning?
Good morning, mate.
Good morning. How about that move in gold, huh?
To be honest, not that big of a surprise when you have like every single central bank throwing trillions and trillions at the market, right?
Yeah. And, now we're at some pretty tricky levels. I mean, now that we're at the 618, I still believe that gold is the place to be. But positioning from this weekend or Monday or, yesterday, we were trading below 1,500 versus, being at 1,600. It's a different story where we're at location wise. So now I think you have to be a buyer of dips rather than a seller of rallies in gold. So, so gold's had a pretty big move. Even silver has, and I'm still not, even though silver broke above the 1350 level, I'm still not a big believer in silver as it is a more of an industrial metal. But I'm sure
it's actually both. It's mostly an industrial metal, but it's also a monetary metal.
Sure. I mean, I guess during the zombie apocalypse, I can give somebody a silver coin or
kill werewolves with it.
Yeah. I can try to switch that out for a bar of deodorant. I don't know. Stelios, how do you feel about silver? I know you're so bullish on silver, so I don't want to beat you up too bad there.
No, it's the reaction is exactly the same as we saw in 2008. So I'm not totally surprised by it, and there is a chance we might go lower. I'm waiting at $10. If we get there, that will be it, I think. But
no, I actually think this $11 level is it's like gold below 15. I think that's the place to own it. And if you think about silver, it's probably more of a buy on dip type of situation than sell rallies. Same with gold, right?
Yep. I agree 100%.
Yeah.
And the move we've seen over the past few days or weeks, it feels like months, but it's not, has been liquidation. We talked about it before. Eventually this will reverse. So, you have to be a little bit patient.
And by the way, if we've seen the low, which, is still debatable because, we need to have more price to determine that. Gold dropped, I think, a little bit more than 25% in 2008. In this case, it dropped 15%. So far, if that proves to be the low, the reaction lower in gold has been a lot milder than it was in 2008.
Yeah, and you think about where balance sheets were at before the crisis and where they're going to be after the crisis, they're going to be much bigger. And so that probably helps explain why gold is where it's at today versus where it was at, the reaction back then. And Stelios, you've been spot on, $4 trillion. It looks like the number might be closer to 2, but I think they'll eventually get to 4, right? That's your number. How'd you come up with that number? You just pulled it out of your butt? I mean, what?
You know what? I don't know how I came up with it, but it
was straight out of your butt. Then that's all you have to say.
I'll tell you what.
Look, I pull ideas out of my ass all the time, and I don't know where they come from. Somewhere deep in my rectum. So
I'll tell you what. It was clear that initially they said 200 billion, then 500 and a trillion. That's not going to cut it with this kind of a crisis, because it's very different to what we had in 2008 and before. So I pulled it out of my butt. Yeah.
All right, good. And I'm glad.
To be honest, it was so funny seeing within 48 hours, they started from amounts below 200 billion. And we got to 4 trillion. Every single hour, if you check the news, the amount had gone up by a few hundred billion, literally every few hours.
Yeah,
it's crazy. So
it was an auction of something, an auction of an old vintage car or whatever.
Well, guys, I'm going to pass it over to you. But before I do, just wanted to make sure that I mentioned that if you haven't taken advantage of being part of the ForexAnalytix community, make sure you do so. And I also have to mention, if you're like, well, I want to be part of the community and I don't get rebates on my trading, well, you better talk to Forest Park FX. This is the time to do it. So they are our webinar sponsor. Make sure you reach out to them. You can contact them directly through our site. You can just go to the reimbursement program. That these Skypes or emails go directly to Forest Park FX. And I want to thank you all for tuning in every day and being part of this community. So I'm going to pass it over to you guys.
Thank you, Blake.
All right, thanks, guys.
Have a good one, Blake.
Yeah, thanks, Coach. Thanks, Steve, Stelios. Have a great one, guys.
You too.
Before you guys get started, I don't know if you saw the breaking news that a custom agent found 2 tons of toilet paper hidden inside of cocaine. Tell me that's not clever.
So the dogs couldn't smell the toilet paper.
That's right. Yeah. Anyway, that's how people are smuggling it now. All right, so good morning, guys.
Good morning, Coach.
Morning, Coach. So the Olympics have been postponed for a year.
What a surprise.
Surprise, yeah.
What a surprise.
That's not such a good sign, because that's July.
Well, they're the Summer Olympics, right? So they have to be held in the summer, I think.
Yeah, but I mean, it's still, my point being, that's way out there. Yeah. To me, it feels way out there.
Yeah, but the thing, Coach, is that even if things have completely settled until then, who is going to book in advance hoping on that? Nobody, almost. Yeah. So it's going to be, from a marketing perspective and touristic perspective, it's going to be a disaster.
Not to mention that you have countries like Canada who have said, right, we're not coming anyway. So they're pulling out already. So there's no way they could have had them. Anyway, so we continue with the with developments of this virus and how it's going. There are some good news. You look at Italy, there seem to be leveling off the number of cases and deaths.
Finally.
But still, it's big numbers. For Spain and France are taking over. The US also, numbers rising. So we've said this before. This is not over. Unfortunately, it's going to keep going. And the effects on the economy are going to be pretty big. Speaking about the economy, we had some interesting numbers today. We had PMIs out of Europe and the UK. And although services PMI just crashed French came in at 29. Remember, 50 is the neutral
With
level.
midpoint being 50, yeah.
Germany, 34.5, UK, 35.7. Interestingly, manufacturing PMIs all beat expectations. So you had in Germany expecting around 40, came in at 45, similar numbers in the UK. And I think the explanation is probably that there is some stockpiling happening. But I think the manufacturing PMI as well is going to start moving lower. It has to.
I think the numbers next month, the numbers that will actually be showing activity in the months of March are going to be eye-popping. I believe they're going to be probably all-time lows. And that might prove to be the catalyst for another move lower if we've had a rebound until then, that, you know, the numbers are going to be cratering. Now, of course, there is a chance that that can be, you know, that we can have a different development, but that will only be if there is some solid evidence that, you know, they found, for example, a cure, or they're very, very, very close to developing a vaccine. I think that that's the only way that the market will be able to dismiss the data that will start coming in within the next few weeks. Other than that, I think that, you know, they're probably going to be the catalyst for at least one more leg to the downside. So I still think that we can make it in the area between 1,800 and 2,000 in the S&P. Now,
But where to first, Steve?
Having said that, I still believe that we can rebound from somewhere here. I mean, momentum is clearly waning. Let's see if we can actually have, for a change, a bullish turnaround Tuesday, since, you know, you like to talk about turnaround Tuesdays, Dale. So far, you know, stock indices are, you know, quite high on the day. I mean, FTSE 3.7% higher, S&P Nasdaq futures 4.3% higher, the DAX is more than 5% higher on the day, Nikkei 6.37%, so Australian stock index almost 6% higher. So far we've had a positive day in response to, you know, all the efforts that central banks have put in. And, you know, let's see how much this can unfold to the upside. I still need to point out here that the S&P is the barometer, of course, for risk, and in the S&P we're still capped by this descending channel trend line resistance. Now, once we break through that, I wouldn't be surprised to see a move towards 2,500. I'm actually still long half of a position of S&P. I'm out of the money. And, you know, let's see how it works out from there. Having said that, nothing has changed. I still believe that any decent rally will probably find sellers once again, and I do believe that we can see more downside following that. We were showing yesterday the zone of interest. Now, having to do with precious metals, Stelio, did we have anything else, by the way, overnight?
Not that I remember. I mean, my comment on the S&P and the equities in general is we're always going to see some kind of relief rally. I think it's almost impossible for markets to go straight up after they've gone straight down like this. There has to be a correction, but I agree. I want to be a seller as we get closer to 2,500 of the S&P. So yeah. But
if we're talking about longer term, let's call it value, because it's, you know, it's a big question mark of if you want to call it value, because it's one thing believing that stock markets are going to go up again because of all the stimulus, and it's a totally different thing, you know, calling it value. So, you know, but anyhow, as traders here, you know, economic discussion is one thing, but as traders here, what we care mostly about is, you know, how to make money. And in how making money out of the stock indices, you know, if it's going to be due to stimulus, if it's going to be due to fundamentals, it's, you know, it's secondary in importance, right, Stelio?
Yes, absolutely. I do. I mean, FX Trader is asking us, do you believe markets can go up again? Of course they can, and of course they will.
They will go. They will go up again. There is no question about it.
We'll make new all-time highs. We'll keep making new all-time highs simply because of inflation. But the question is, will we take a Japan-style 30-year path, or is it going to be a 2008 onwards path? That's the question.
To be honest, I'm the one that has been using the Japan and European examples that, you know, you shouldn't be expecting new all-time highs just because the market has been bullish for so long, because look at the people that were buying Nikkei at the highs at 1989 and people that were buying Europe a decade ago, etc., etc. The point being, though, here is the following. One of the reasons that Japan, the Nikkei hasn't seen all-time highs again, one of the reasons, not the only reason, obviously, is the fact that Japan indeed has a very low inflation. Now the question, Stelio, is what is the chance that the US, for example, can have a very low inflation for the next 10 years?
Zero.
Because with what they're doing,
yeah.
I think the chances are very close to zero, indeed.
I was going to say, I think the recovery is going to be more 2008 style and not Japan style, simply because of the amount of you know, easing and liquidity and money, you know, pumped into the system. So I agree with that.
Now, if we're talking about, you know, if we want to look at it from the perspective of, you know, the average human being, a citizen, now, should you care if stock indices hit new all-time highs or in nominal prices, or should you care more about preserving, you know, the value of your money? I think the latter is obviously, you know, what you should be hoping for, but I don't see that happening. So yes, I agree with Stelios. I think there are very high chances that within the next few years we're going to see nominally new all-time highs in US stocks. It is a very, very decent chance, but it's not going to be for the right reasons. It's going to be for the wrong reasons. Most probably it's going to be due to big devaluation in the US dollar, in my opinion, and, you know, high inflation. Now, what percentage of that inflation is going to be reported is a totally different story, but you know, the markets can see through that, as gold has proved over, you know, the past few hundred years. So now, can we actually say that we found some type of a short-term low with yesterday's low? As I said, we can't be sure yet. How would I feel more certain about it? If I see a move above, let's say, 2385, 2390, you want to call it 2400. And I think once that happens, we definitely should be looking for another 100 handles of upside. 2500 then is going to probably be quite a nice area of resistance. Above that, which isn't unlikely that we can see levels above that, I would be looking closer to 2700. Keep in mind, and we've said that again and again, bear market rallies can be very, very brutal, and they can really fool people into believing that the market has found a tradable low and it's going to be one-way street to the upside from there. But usually, at least the first time this happens, it's a wrong signal. Okay, so I think it's going to be quite dangerous getting caught up in a rally after it has run its course, and thinking, you know, that we're going straight to new all-time highs. As I said, new all-time highs is 57% away from yesterday's lows. So, you know, it's, let's say, overly optimistic. I totally understand where Grigoris is coming from, thinking that we can see all-time highs. And as I said, I also believe that. Do I believe that can happen within 6 months? No, I absolutely don't believe that, especially given the fact that coronavirus effect to the economy is not going to go away immediately. And that's always going to be weighing in the market. Now, once the coronavirus issue has been completely resolved and with all the remaining liquidity in the markets, yes, then we can see a steady course to new all-time highs. But once again, I'm going to say, I think there are going to be better plays out there. of course, that doesn't mean that individual stocks cannot be amazing buying opportunities, even for fundamental reasons. We were mentioning the other day, for example, a few crude related stocks. Shell, I think, had a rally of like 10% yesterday, as an example. So I do think that
it's up another 12% today, I think, or something like
yeah,
that.
so 22% higher in 1.5 days.
Yeah.
And we warned about that. We warned that this can happen because there were some companies that, can't really go down based, on the fundamentals that had been, battered like nobody's business. Now, imagine that is all happening without crude even having found the bottom. I mean, yes, crude is still like rebounding from just above $20, but the chart is still not saying that, we found a tradable low. As far as I'm concerned, this can be another consolidation before another leg lower. And I wouldn't be surprised, as I've said, to see crude at 16, 17, 18, 15. Why not? But I do believe it's going to be, very temporary. I don't think it's going to be sustainable for more than a few weeks. Worst case scenario, few months. And to be honest, the more crude stays at very low levels, probably the higher these stocks, these very solid companies can rebound later on. Because keep in mind that the weak hands, the longer crude oil, natural gas stay at very subdued levels, the more companies that actually don't have healthy balance sheets are going to go out of the market. So when this market recovers, the companies that will have stayed afloat will have a bigger upside because they will have now a bigger market share. That's why I'm very much fond of finding the best companies in the sector and getting some exposure to 2-3 of them. Shell is one example. Okay, so
I think actually a lot of the FANGs have held up the best, and they were
yes.
going down before the crisis.
Listen, coach, there is a reason though for that, and there is a good reason. And
yeah, they're monopolies.
That's not the only reason. For example, look at Apple. Has Apple held up well? Depends. I mean, it's moved from 330 to 220. Yesterday, actually, today's low is 213. So that was a 35% move lower, which is exactly equivalent to what the S&P has done.
Okay, good.
Now,
point.
Having said that, look at Amazon. Amazon has held up much better. Why? Because Amazon has a business model that is actually not negatively affected by the coronavirus crisis and the economic downturn. Netflix would also be a bad example to use in this case. Remind me, what is the... Yeah, here it is. Because actually this has been an amazing opportunity for Netflix, right? Netflix during this period is going to increase their clients, substantially. So on one hand, you of course have an economic slowdown which will affect the buying power of the average household, but on the other hand, you have so many people that are now buying Netflix subscriptions. So
well, how come the marijuana stocks haven't really participated? They popped a little bit, but you would think that would be part of it, and then then you go to munchies.
Facebook, on the other hand, look at this.
Oh yeah,
38% to the lows. Now somebody could say, yeah, but why isn't Facebook benefiting from that?
Yeah,
because people staying in home. I mean, aren't they going to be spending more time in Facebook? Yes, but the thing is that Facebook had already reached more or less its maximum potential in number of clients it can have, right? So there wasn't much upside in expanding, the client base, and it will be affected because who is the actual client of Facebook? We've had this discussion before. The companies that actually market through Facebook, right? That's how Facebook monetizes
Yeah.
its product.
So
Don't
ad
get
revenue is down.
Don't get confused, guys. You, as individuals, are the product of Facebook. You're not the clients of Facebook. You're really not the clients of Facebook. The clients of Facebook are the advertising companies. You are the product Facebook is selling to the advertising companies. So they already had the product, and they will keep on having the product until, you know, something happens in the market and there is some type of a disruption if and when that happens. But what is now happening with companies that are advertising? They start having issues with their balance sheets, and they have a lot less money to spend, and that will definitely affect their ability to advertise.
You and Stel were certainly right about Tesla. You guys were going to buy all the money puts when it was near the highs.
Tesla, yeah, Tesla. I mean, you know, there was the definition of the bubble here, right?
Yeah, that was a woulda, coulda, shoulda, huh?
Tesla has lost 63% of its value, 64% of its value until 3 days ago from the highs.
Yeah.
I mean, I really don't understand.
Oh,
I mean,
it's a fib retrace.
Yeah, I think the same segment of people that are closing their eyes and are buying cryptocurrencies are the same type of people that are buying Tesla. Listen, let me make that very clear, because Tesla and Elon Musk have, you know, people that love them or people that hate them. As always,
like
the best approach is somewhere in the middle, which means what? There is no question about it. Elon Musk is a brilliant individual. And, you know, no matter what happens to Tesla and the rest of his companies, he will definitely, you know, have a page in history, because in essence, he reinvigorated, you know, an industry, you know, electrical vehicles industry, and, you know, he's a pioneer, and blah, 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 and all that. Now, the next question you have to ask yourself, if you want to think yourself as an investor, okay, you like Elon Musk, you know, I like him as well in some aspects, but does a company prosper just because it has a good idea? And the answer is no. Is Tesla fundamentally sound? The answer is no. Tesla hasn't managed to ever make money in a year for so many years, and somebody could advocate that that's not big of a, you know, that much of an issue until a few years ago. But now, listen what the problem is. There is now competition in Tesla, and the competition that has come in the market, companies like Mercedes, BMW, Audi, Porsche, those are companies that can make much better products having to do with quality. Okay, so if Tesla didn't manage to make a profit and establish itself in the market, at least, you know, in numbers, as long as it was literally a monopoly, I don't see a bright future ahead, knowing that now there is competition from companies that have been doing this for 100 years, and we know that the products they make are far superior. So I'm quite bearish Tesla, and I think that Tesla is very likely to either go bankrupt in the future, or being probably more likely being absorbed or bought off from another company. So, you know, the only upside I can see here, if you see Tesla at low valuations, is hoping that somebody else is going to buy it out in the future. Yeah, Tesla does have an advantage through the batteries. You have a point there, Jane, but I don't think that's going to make much of a difference if they can't sell the cars, right? If competition is much better and they can't sell the cars, I don't think, you know, batteries are going to save them. Perhaps what they will end up making is spinning off the company that actually makes the batteries, and that can prove to be a very profitable company, and it can continue to have Tesla as one of the biggest clients, but Tesla might belong to another company. So there might be another company buying out Tesla using, using the brand name for its electrical vehicles, for example, and, you know, produce its electrical vehicles under the name of Tesla. Who knows? Anyhow, the market can't be right at the same time. February 20th at a valuation of, I think it was worth 4 times BMW at $970, and be also right at $350 3 days ago. Right? We can at least agree on that. I mean, between February 20th and March 20th, nothing fundamentally changed for Tesla to be worth 1/3 of what it was worth back then, as nothing fundamentally has changed between September, that it was worth 220, and February, that it was worth 960. So if you want to be objective here and you have eyes, one thing is very clear here: the way Tesla stock is moving makes no sense, right? So this is more or less what I like to call a casino type of stock. And, if you're willing to trade something that doesn't, go along with fundamentals, but just wants to squeeze investors, go ahead and be my guest. But, as I said, looking at the long term, I don't really see a bright future for Tesla, at least not knowing how things stand at the moment. Anyhow, enough time spent with Tesla. We have a question about crude. I already covered crude. You can see the recording. Now, having to do with silver. Very nice rebound from silver. Silver is now back testing this area of support, previous area of support. You can see it here. Actually, if you extend it back, you can see, there you go. You can see that this was an important area, dating back quite some time. So important level for the market to see if it can penetrate through it, or it's going to get rejected from there. So bottom line, this 14-cent area, 14 to 14.25, key resistance area. If you want to be short silver, I understand why you would want to do it from here, but keep in mind that if we close above that area, we might have actually found a low in silver. And given the fact I said that many, many times, silver was already offering an amazing long-term value. At some point in the not so distant future, people are going to be looking back and seeing that silver was actually worth almost $11, in 2020, in my opinion, and they're going to be like, oh my God, that was a buying opportunity. Yeah, it was a buying opportunity. Nobody says that it can't even go lower than 11, but even if that happens, I think it's going to be, as I said about crude, if it goes to tins, it's going to be for a very limited amount of time. So if you are a medium to long-term investor, in my opinion, you buy at $11. And if you see silver trading even lower than that, instead of, being displeased, you're probably going to be, smiling and saying, okay, nice. This is a good area where I should be increasing my exposure, and not the opposite. Now, so let's see what happens today. Let's see how we close the day. Having to do with gold, gold exploded higher as well. Of course, no surprise here as well. Keep in mind, this 1580, 1590 area, quite an important support resistance area. Let's see if we can manage to close above it. By the end of the day, I want to see, a daily close above it. I think that if we actually close above there today, we might have seen the low in gold. And then the next move is going to be, in my opinion, to the 78.6% of the all-time, from the all-time highs to the lows that we saw a few years back. Here, 10,050 roughly, end of 2015, which comes at 1733. So that's going to be the next area of resistance. Now, if you want to be short and we close below the 61.8 and especially below 1590, sure, you can try to be short today. But personally, I've said that again and again. I'm not looking to be short gold. I'm only looking to be long gold, and I'm actually long gold because I have physical. Now, obviously, another buying opportunity here. I actually bought that and made some money. I didn't rebuy it because I was hoping for a lower low than the one we had that day that we spiked towards 560. I'm talking about platinum, as you see. So let's see what happens with platinum. There is a chance that this might be some type of a bear flag. I really hope so, because I would be more than happy to buy it even cheaper. So we might see something like that if this is some type of a bear flag. But keep in mind that if and when, actually when, because it's not a matter of if, it's a matter of when we go back above 770, 775, I think we will have good reason to believe that we did see the low in platinum. Now, if you remember, I warned, and that's why I got rid of my palladium position. I warned that as we see a rebound in risk, which we haven't seen that much of a rebound in risk yet, we might see a rebound in palladium, and we have done so. Palladium actually earlier today reached the 2000 area. It backtested the 2000 area. Now, I still believe that as long as the stock market has more downside to go, same deal will apply to palladium. So I wouldn't be surprised to see another leg lower. Might happen from here, might happen from 2000. In any case, I wouldn't be sorting palladium until I first see a risk rebound. So until I see a rebound in stocks, and then I feel that this rebound is about to fail. I think that's going to be a good signal to also be short palladium. Once again, we also had a question about copper. So copper almost made it to the 2016 lows. It spiked lower, not as, not exactly at that level, but, rather close. And we're seeing a decent rebound from here. First area of resistance is roughly here, 220 to 22. So, this might create a response. Above that, I would be looking towards 230. So obviously, this is another, another ticker, another metal here that points to a likely rebound in the short term, along with risk. USDMXN, and if you remember, I mentioned
Nice
that
review,
yesterday.
bro.
Oh, sorry. I hadn't
That's
even
all right.
noticed them. Yeah. Sorry.
I thought I'd break your mo.
Yeah, thank you. Because I hadn't noticed the time. Also, keep in mind, if that happens, I said that yesterday, USDMXN is going to be reversing and pulling back. If that's the case, already turned lower from the insane reading of 97 that we had in the daily RSI. So watch closely USDMXN. If all that stuff starts pulling back and rebounding, you should expect USDMXN to also, produce some significant pullback from here. Who do we have for an interview today, Dale?
Larry Tentarelli.
Okay, great. Enjoy the interview.
Okay, so Larry, hold on. I'm going to get you set up now. Looking forward to meeting you and talking to you. I've been to your website. Some good stuff there. Okay. Welcome to Phase, Larry.
Dale, good morning. Thank you.
Very nice to meet you.
You too. You too. It's been a long time coming. I really appreciate the opportunity.
Oh, yeah, I'm glad that we finally were able to do it. Providence, huh? So anyway, Larry, you can share your screen. There's a drop-down menu if you hover your mouse around it, and you'll see a green box that says share.
Share, okay.
You click that and then choose your screen, and we'll be able to see your setup. And you see it there anywhere?
I do see it. Yeah, I'm just getting into my chart screen.
Okay.
So let me go back to yours. Bear with me for a second. I had you, and then I lost you for a second.
Okay.
Let's see.
Here
All
it
right,
comes.
so share screen. So now you're on my screen, right?
Right. We got the CNBC page up, and now stock charts
Stock
is up.
charts. Okay. All right. At least now I know how to do that.
All right. Beautiful. So, Larry, I went to your website, and some real nice calls you've made, and you came up through kind of like the conventional way of, major wirehouses, what I used to call them when in the prehistoric age, and decided to just branch out on your own and start your own business. And Wondering what was the major motivation after being at firms like Merrill and Smith Barney for striking out on your own? Was it the model? You know, I was a broker myself. I had my own IB, and in that business, there is an inherent conflict of interest that doesn't exist anymore now that people could trade commission free. But you know, we were compensated based upon commissions, and as a, you know, I remember a commercial they used to run on CNBC where you'd have a broker at a bank of phones with a paper bag over his head, and every time the phone would ring, Larry, he'd pick it up and go, "Sounds good, let's do it. Sounds good." Everything sounded good because it meant another round turn. So, what was it that drove you to, you know, strike out on your own? Did you want to become are you a registered investment advisor, or you just wanted to step away from the regulated type of business?
You know, Dale, that's a good question. And what I think it is, it came down to a couple of things. When I became a broker, so I took my test back in '99. And when I became a broker, I was always fascinated with the markets, but I thought that it was going to be a lot more on the trading side and on the market side. And what I found out quickly, it was a lot more on the, you know, sometimes the client hand-holding side or the psychological side. And I'd have a client with $1 million in CDs and munis, and when rates would move, they couldn't figure out why their net asset value fluctuated. And I found that, you know, where I was in West Palm Beach, and I found that the reason that I got into the business wasn't exactly what I was doing in the business. I thought it was a great business. I really enjoyed dealing with the clients, but I wanted to get more involved in the actual technical trading side than what I found from being.
How do you like cold calling?
Oh, it was great. I could knock out 500 phone calls in a day.
You animal, Larry.
They had, in a phone bank at Merrill Lynch, there was about 25 of us in what they called the bullpen, and I would just start at 7:30 and just go through the day.
I remember. Yeah.
It was fun. It was good times.
Yeah, you had camaraderie and everything, and you know, it was like you know, you land a few accounts, and I'll tell you my favorite episode, and if you've never seen it, and anyone listening to us right now, go to YouTube and pull up the taxi episode where Louis De Palma goes to become a stockbroker. Okay, yeah, any stockbroker, anyone who's been in the business, you have to watch that. All right, so let's get serious. Looking at your NASDAQ chart and talking about Sirius. I've been around for a while. You know, I was already an old timer when you started, Larry. So you started in '99, so you came in right around the dot-com bubble, and then you saw the Great Recession. Have you ever seen a decline of this magnitude? I think you had to be around in '29 to see something happen so fast, or at least '87. So were there any things I noticed on your website that you got out of all stocks at S&P 3200? You went to cash. What was it that told you at 3200, even though there was almost, you know, another 1%, I mean 8% or so to 3390? What told you that it was time to be raising cash? Was it fundamentals like valuations or something technical?
No, it was all technicals, and what I do is I stick just to the chart. So there was a couple things, and I was pretty long, so I had a lot of long exposure up in here. But what happened was, and this is something that I went over on the website, so 3214 was a key level that I had been looking at. And what happened is when, and I have this on a blog on my website, but when the price broke down below the 50-day, this was the first time, as you can see on the screen, that it broke the 50-day going back to October.
Yeah.
Second thing was 3214 had held 2 times, and then that broke pretty quickly. And then once we broke down below 3200, what I did was I shifted the focus on my website and on the Twitter feed to a raising cash mode. And partially what happened is I just had a bunch of stops. I had pretty much no stops go off anywhere in here. And then out of the blue, I just had a cluster of stops start to go off right away. So really it was three things. It was the break below the 50-day, the break below 32.14, which is held twice. And then once we lost 3,200, I just decided to go into, let my stops get hit, go into a raising cash mode.
What was the execution on those stops, Larry, during, at times air pockets in the market? Were fills pretty good on your stop losses, sell stops?
There was a couple that had gapped. There was a little bit, obviously, of a gap in here, but for the most part, it wasn't too bad.
Okay. All right. So here we are at 2,200. A lot of people would say, we've discounted a lot. What's your view with what happened? I think, and tell me what you think, that as bad as it was in the stock market, that what happened in some of the debt markets is even more troubling, especially LQD, which was investment grade.
Sure.
That we have a credit crisis going, regardless of what kind of recovery we get or bear market rally. What are you doing down here? What are your, what's the Blue Chip Daily saying about here? Just sit in cash? Are you deploying it into precious metals, or you just think that cash is king and you just sit on it down here? You're selectively buying.
I started to put some money to work. So last Wednesday, I started to put some money to work in large cap tech, and that, some of that's a little bit underwater, not too bad right now. Gold is a top idea. So my two best ideas right now, well, actually there's a couple. So, and as you can see, I'm much more focused on the NASDAQ than I am on the S&P. So the NASDAQ has showed relative strength. If we take a look at,
I noticed that yesterday too.
So the NASDAQ is still holding above the June low and well above the 2018 low. And the S&P, and this is something I put online, the S&P has a lot of problem industries.
Yeah, interesting.
Lines, hotels, casinos, I think cruise lines, I think a lot of these industries that have been wrecked do have a lot of fundamental issues. Like we took a look at Wynn last week, and I think Wynn's debt to equity, I mean, the chart's a mess, but their debt to equity is something like 6-1. And I think that these companies that are loaded up in debt and they've got no customers, I think that could be an issue. So my focus has been on the large cap and the mega cap tech and the high relative strength names. We had a buy rating on Zoom at 107, and that took off pretty well. So I've just basically been focused on the higher relative strength charts and the names that haven't broken down.
Okay, so I was reading and noticed that the Russell did not make a new low with the S&P yesterday, and the Russell was really led it, hadn't made a new high for a long time. Any comment on, mainly U.S. companies, mainly domestic, not multinationals, and really this was probably the worst performer unless you go to individual issues like Tesla, etc. Any view on Russell in here? A lot of gaps.
I don't have any interest there. So basically what I focus on and what I do is a little bit different. So sometimes people will look at a chart and try to figure out, if I look at this chart, is it going to go up or not from here? And I don't do that. So what I do is I've got a process. And when I look at a chart, I just ask myself, does the chart or this stock fit into my process? So if it does, then I focus it on. But the Russell, a lot of these industries, so like the small caps, the airlines, the casinos, what my take is on those is they could be very, very high reward, multi-baggers like in these airlines or these casinos, or they could have another 50% down. So I'm going to steer clear. Really large cap tech is where I'm looking at right now.
Okay. I believe I read on your site here that the kind of technical work you do is more reactive than predictive. Did I read that correctly?
Exactly. Exactly.
Okay, so why don't you explain to the audience that way you're not predicting the action, the action is happening and you react to perhaps it gets to an important zone rather than saying, well, it's here, so I'm looking for this.
Right. So what happens is, so let's take a look at AMD, because this is one of the charts that I highlighted over the past couple of days. So this is one of the few stocks in any group that hasn't closed below the 200-day moving average. So if I were looking to take a position here, and I know that the reaction low is, let's call it 36.75. If I take a position here and I put my stop, let's call it 35.50, I'm not looking at any of this and saying, well, based on a chart pattern or whatever, that it should go higher. I can just look at this chart, measure the risk and reward, and say that if the low is in, and I have no idea, but if the low is in, then AMD shouldn't come down to 35.50. And the fact that it's held this 200-day moving average when pretty much everything else has been crushed tells me this is a higher probability trade.
Because it has relative strength compared to its peers.
Exactly.
Okay.
Yeah, I mean, because everything, Apple, they took Apple apart the other day. But AMD is one of the few. AMD, DocuSign, Zoom, Teladoc, those are just a couple names, a few that haven't closed below the 200-day when everything else has been pretty weak.
Okay. I see that you write for See It Market. I know those guys. I've interviewed quite a few of them.
Sure.
And that you have a blog on Bitcoin. So it's interesting for, well, it's not that unusual, but interesting that you follow crypto. Maybe you could give us, your view on what you see happening. A lot of people thought it would be kind of a hedge for what we saw just happened, but it got caught up in the liquidity squeeze too, but it's bounced back. Okay, so you trade GBTC on that. Okay.
Yeah, I trade, and let me pull up the Bitcoin chart. So I'm what you could call a part-time crypto follower, and basically what happens is once it gets over the 200-day moving average is when I start to pay attention to it. And then other than that, I kind of don't follow it too much. So I was fortunate enough to get most of this move. And then when I wrote my blog, it had just gone over the 200-day, and it started to work pretty well. I was in GBTC, and then I eventually got stopped out of that position. So this is a tough market. Technically, if I just look at the chart, until it gets over, let's call it, where's it at 67.50?
8,000.
8,000, 8,500, because what I want to do.
A confluence of your MAs all converge there. I like when that happens. Convergence, confluence of things that you watch.
And there's a lot that's going on in here that shorter term traders, I'm sure, can dial into it. But basically what I just look to do is I just look to catch what the major move is. I thought this could be the start of a major move, and then when it started to unwind, I just stepped aside.
Okay, and only play the long side, not the short side.
In the cryptos, yeah, and for the most part, I don't do too much on the short side anymore. My last really good short trade was I was short the NASDAQ back in 2018 at the end, from November through December.
Through what, ETFs like SQQQ?
Just triple Q.
Okay.
Yeah, I was short triple Q. I was short a little bit of USO, and I was short NVIDIA. But what I found is trading on the short side, it's a different dynamic. And then what happens is I had a pretty good triple Q trade, but then once the market started to rally coming out of the low, I did have some SPY, but I took another 2 short triple Q trades that got stopped out on the way back up. And what I've decided to do is just focus more on the long side, and it gives me a lot less to do, for mental capacity. Because what happens is so right now, a lot of people have a short bias. And what happens is whenever the final move comes to the upside, they're probably going to short that a couple times. And so I'm focused mostly on the long side. So cash, if that doesn't work, I had a pretty good position in TLT. So when the market started to come undone, I was long a pretty good piece of TLT. So I just focus more on the long side for
All
now.
right, let's go to TLT because you couldn't even hide in there after the blow-off move to 180.
And they got me on that one. That
Okay.
took me out. So I caught this move.
Yeah.
I was lucky enough to sell it near the high, but then I bought into it too soon.
Yeah.
And you know, the volatility just took me out.
Yeah.
But until
How now, brown cow, with the Fed coming in and that type of break? Is this a failing rally, or is there another shot for another new high? This is a tough call. Are you back long TLT again?
I've got no exposure there right now.
Okay, I wouldn't know what to do either. It
Yeah,
almost looks like it could make a new high.
You know, I can't get a clean read, and what happens is when the volatility starts to do this, I just kind of step to the side, because what happens is I use hard stops, and in this type of volatility, even I could be right on the position, but in the short term get stopped out.
Right,
So
called right the market,
one of,
wrong the trade.
Yeah, GLD is one of my better ideas right here. So GLD, and this is just the ETFs. I'm going to pull up the cash chart, but 1400 to 1460 is key longer term support. So what my view has been is over 1400, and this was resistance for about 6 years, but over 1400, the longer term trend is intact. 1460 is a little bit of shorter term. So fundamentally, and I don't look at fundamentals too much, but QE Unlimited should be good for precious metals. And the chart itself in gold and GLD, it's got a rising 200-day moving average. It held in this level here. So over 1400 is bullish on gold.
Okay, yeah. Easier to see now than when it was trading 1400. Although here we are at 1620. It doesn't look like you use fibs, but we have retraced a little bit more. 60.8.
Yeah, because if you look going back to the monthly, so going back to 2013, you can see it couldn't break over 1400, and then it finally did. So if I just use a pure price level, as long as it's over 1400, longer term it's bullish, and then if it breaks below that, then I want to be out.
Yeah. Okay. It sounds. You also write about the miners, and were you surprised when GDX traded 16 with the market crash?
Very much so. And this is another market. I'm not in this right now, just because I can't have any type of stop in there. Yeah. So I'm not sure what happened.
They're taking markets away from us, Larry. I mean, we all were praying for more volatility. Be careful what you ask for. And now some of these markets, this kind of violent and magnitude of ranges expanding exponentially makes it almost a no touch for me in many of these markets now.
It really does. It really does. And especially
you really need a lot of discipline to not trade, don't you?
You do. You do.
How do you overcome FOMO?
It's taken a long time. It's really taken a long time. I just got tired of losing money.
That's a good way to get over it.
Yeah. Usually when I would FOMO, I break the rules and then I'd lose money. And then I got to the point where I just got tired of losing money. So now I just kind of sit. But there are some things. So like when it's more volatility like this, I look more at the ETFs. So when I take a look at something like, say, Triple Q or XLK, which is in the tech sector, these are still volatile. But what I do is when the volatility picks up, I just run a wider stop and a smaller position. So that because I want to have my exposure. So I've got some exposure in XLK right now. So I want to have my exposure. And then if things start to work on the upside, I can always start to put some money in. I just don't want to get caught up, in any of this. So I started to buy some XLK last week, about 74. Had a little bit of a drawdown, but I set my stop. It was a 15% stop. So basically what that says is that I don't have to get the next 5 or 10% of the move right because of the higher volatility, but I want to get the next 15% plus right. So by having my stop down there, it gives me enough room to, if it starts to work, I'll add some money.
Okay. It looks like there's some confluence up around 83.
Yeah.
An important low and so forth. All right, Larry. Well, you sound like You've been through the school of adversity, and
Yes.
you've learned to become disciplined, and it's okay to do nothing. And you sound like you know about risk management and everything. So for people that are here right now and people that see the video later on, why don't you show them your website and the best way to get in touch with you?
Great, I appreciate that. So we'll go, it's bluechipdaily.com. And then they can see, just to give you an idea. So what I do is I share my recent best ideas. So I've got a premium Twitter feed. And then what I do is I'll post a sample of some of the trades, you know, screenshots from there. And then the best way to reach me, there's a contact link where they can go right on. I've got a pretty interesting blog page where I post pretty heavy as far as technical trading and the concepts that I use. And then on Twitter, and I'm sure you'll have that, it's at LMT978.
Okay. Well, I really enjoyed meeting you. I wish you, not just financial success, but health for you and your loved ones, that you remain untouched, and that, you continue to follow your passion, and that great ideas continue to flow to you, Larry. And like it or not, you're now my trading warrior brother. You've passed the walking on hot coals test by being interviewed with me.
Dale, that's great. I've got to tell you, I really appreciate the opportunity. And the same thing to you. You know, these have been trying times. You know, we're all in the house together and all that, and we're trying to, capitalize on things, a lot more family time. But, the best to you, stay safe, and let's look forward to some big days ahead.
Great. Okay. Well, great meeting you. And really, I hope that you stay green while, that these quiet times are actually give us a little bit more time to think about macro things besides our trading. So continued success, Larry. Really was a pleasure meeting you.
Dale,
Thank
you
you for
too.
your time today, buddy.
Great. Thank you very much.
Okay, so that's a wrap for us, everyone, here on Follow Through Tuesday. Good hunting and the rest of the day, and we'll see everyone tomorrow. Remember, don't just count your gains or your Krugerrands or your mining shares, count your blessings. Again, my prayer for all my friends is that your loved ones remain untouched. And we'll see everyone tomorrow. Adios.